our group want to talk about introduction of financial accounting. So this is my group. Number one is Ahmad Syakir bin Selamat Marianto, and me, Aizat Kazafran bin Izzat, Ahmad Zamir bin Zamri, Adam Daniel bin Hamidun, and Muhammad Ali Faikal bin Abdullah.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Adam Daniel bin Hamidun. Today I want to introduce to you the first chapter. So the introduction is a corporation has a wider to include an entity, form or incorporated existing in Malaysia or outside Malaysia, include any public authority not incorporated for commercial purpose, sole proprietorship, cooperative societies and trade unions. So, the other hand, a company under the Companies Act 2016 need one or more persons to register the company for any lawful purpose with the registration requirements of the Companies Commission Malaysia.
Of companies based on Companies Act 2016. It can be divided into two types of companies. Number one is limited and unlimited liability companies, and number two is public and private companies. So this is a limited and unlimited liability companies. There are three types, which are company limited by shares. So the member liability limited to the amount unpaid on their share. The second one is company limited by guarantee. A member's liability is limited to the amount they agreed to contribute in the event the company is wound up. And the last one is unlimited company, where there is no limit placed on liability of a member of an unlimited company. So
So now we will go through to the types of company in Malaysia. So there's 5 types of company in Malaysia. So we will go through the first one. The first one is public company. Company other than private company that is required to have the word Berhad as part of and at the end of its name. Limited by share or guarantee. No limit on the number of shareholder. Can offer its shares and debenture to the public. Okay. The second one is private company. Liability is limited by share. Total number of members does not exceed 50. Restriction on transfer of share. Not offer share or debentures or allot or agree to allot its share to the public. Prohibited from making any invitation to the public to deposit money with the company. And the last one is have the words Sendirian Berhad as part of or at the end of their names. Okay, so let's go to the third one. So for the third one is exempt private company. So private company with no more than 20 members. Share are not held directly or indirectly by any corporation. So for the fourth one is foreign company. Company, corporation, society, association or other body incorporated outside Malaysia. An unincorporated an unincorporated society, association or other body that can sue or be sued or hold under the law of its place of origin and does not have the head office or principal place of business in Malaysia. So for the last one is government linked companies or GLC. So corporate entities in which government owns some or all the share capital. It could be private or public companies. Government may hold a stake of the company using a holding company. Could be former government, could be former government agency such as Post Malaysia. Example of GLCs in Malaysia are Petronas, Malaysian Airlines System, Tenaga Nasional, Maybank Telecom and Kereta Api Tanah Melayu. Okay, so that's all for the type of company. Let's go through to the next.
Now, we move to the registration requirements based on Companies Commission of Malaysia. So the first one, we need minimum paid up capital of RM1. Second one, minimum of one shareholder. Next, minimum of one director. Age need more than 80 years old. So Next, propose company name and its name, meaning. So the last one is copy of IC or passport of director and shareholders.
Okay, so now it's financial reporting requirement based on Companies Act 2016 and the Financial Reporting Act 1997. Okay, so we will start with Company Act 2016. So I will start from section 243 to section 251, which is cover matters pertaining to the preparation and presentation of financial statement. So maintain and characteristic of the financial statement prepared by a company are governed by statutory and other regulatory pronouncement. So the third one is every company, directors and managers shall keep such accounting and other records that explain the transaction and financial position of the company. So the fourth one is enable the preparation of financial statement, and any document to be prepared from time to time will be true and fair. So for the fifth one, record should be kept in such manner as to enable the transaction and financial statement to be conveniently and properly audited. So for the sixth, all accounting transactions should be recorded within 60 days of occurrence of the transaction. So for the seventh, company should retain the records for 7 years. Okay, so for the last one, required to maintain other important books and register which may be made available for inspection on request. Okay, so for the next one, so for the section 252, so required directors report to be attached to the financial statement of the company. So the second one is directors report may also contain a business review. So business review content have 5. Okay, so for the first one is fair review of the company business, description of the company principal risk, analysis of the company development performance, key, and the fourth one is key performance indicators, and the last one is information about environmental issues, its employment, and social and community issue. Okay, so let's go to the next. So for the next one is Financial Reporting Act 1997. So it created two independent bodies, which is Financial Reporting Foundation (FRF), and another one is Malaysia Accounting Standard Board, which is MASB. So Financial Reporting Foundation function is oversees the operating activities of the Malaysian Accounting Standard Boards. And the second one is the mandate the Malaysian Accounting Standard Boards to issue financial reporting standards. Okay, so for the last one is function of the MASB. So the first one is issue new standards, review, revise or adopt existing accounting standard. The second one is issue statement of principle, and the last one is develop conceptual framework.
Assalamualaikum. My name is Ahmad Zamir Danish. So I will explain about 5 elements of annual report. Before that, I will introduce a little bit about annual report. Annual report is a compilation of the reports and financial statement that required by law. So the first one is chairman's statement. Chairman's statement is a report from the chairman about progress during the preceding year and prospects for the future. Chairman's statement also provide background material to the overall present position of the company. So the second element of annual report is corporate governance statement. In corporate governance statement, the companies are to comply with the Malaysian Code of Corporate Governance that was issued by the Ministry of Finance. In this statement, a lot of information is given regarding the board of directors. The third one is financial statements. In financial statements, it is include the director's report, auditor's report, and financial statement. So the next elements of annual report is audit committee report. Audit committee report is a statement by the auditor regarding the findings of the audit of the company's book. The audit company usually consists of directors and independent senior management executive who provide assistance to the board of directors to allow them to fulfill the responsibility relating to corporate accounting and reporting. The last element of annual report is social responsibility statement. This statement discloses social responsibility information. The report synthesizes and makes public the information organizations decide to communicate regarding their communications and actions in social and environmental areas. Okay, that's all the elements of annual report. So we move to the next slide.
Legal requirements in Bursa Malaysia Securities Berhad. Firstly, they have to make additional disclosure regarding of the performance of the company. Secondly, they have to make a preliminary statement of result within the 6 months following the end of the financial year. Lastly, they have to issue half-yearly reports regarding their performance within the 3 months following the end of the half year. Advantages change from partnership to company in form of business. Firstly, liability protection. Shareholder do not risk losing personal asset because of a company's debt. Because corporation.
Okay, so just now Alif had told us about the advantages of changes from partnership to company from business, and now I will tell you guys about disadvantages changes from partnership to company from business. So there are three I give to you guys for the disadvantages. So for the first one is double taxation, which is depending on the type of corporation, it may pay taxes on its income, after which shareholders pay taxes or any dividend received. Income can be taxed twice. Okay, for the second one is excessive tax filling, which is depending on the kind of corporation, the various types of income and other taxes must be paid can require in the substantial amount of paperwork. The exception of this scenario is the S corporation, as noted earlier. So for the last one is independent management. If there are many investors having no clear majority interest, the management team of a corporation can operate the business without any real oversight from the owners. Okay, so we all move to the next point.
Okay, next, the difference of the element disclosure in financial statement between company business and sole trader. The first element is tax income. Tax income for company business is the company business is imposed tax as it is a separate legal entity. It means the company business need to pay tax because company business is a separate legal entity, while the sole trader, the tax on the income of the owner or sole proprietor. So the next element is preparation for accounting. For company business, the company needs to follow proper accounting concept, principles, rules, and other regulatory framework. So the company needs to follow all the accounting preparation, while the sole trader, it is not subjected to any accounting standards or generally acceptable accounting practice. The owner can decide whether financial statements need to be prepared or not, and if they decide to prepare it, the form of the financial statement is also the decision of the owner. So if the sole trader, the owner will decide whether the preparation of accounting need to be prepared or not. And the next element is audit. In company business, it needs to be audited and therefore needs to follow the strict accounting concept, principles, rules, and other regulatory framework, while the sole trader not subjected to audit. It means the sole trader not need to audit.
So, the difference between company business and sole trader. Firstly, salary expenses. Statement of income will report a salary expense, the amount that the stockholder earned by working in the business. But sole trader will not report any salary expenses for the sole proprietor. Secondly, owner equity. Company business. In shareholder fund, they have share capital plus required earnings plus other revenue and other capital reserve. But sole trader only have one.
Okay, the conclusion for this chapter is we can learn that how we want to register a company in Malaysia legally and gives an overview aspect of company formation. Other than that, we know about the financial reporting responsibilities of company. So I think that's all. Thank you. So this is all reference that we search for to complete our slide. That's all from us. Thank you.